So why do we look at calendar events? Well, we look at calendar events for short-term opportunities that have a high probability of working out. So on Thursday, the 6th of June, we were looking at the ECB interest rate decision, which was coming out at 1:15. Now, if you look at this decision, we had a preparation using our cheat sheet, and what we were looking for was a situation where the ECB cut rates but revise their inflation and growth forecast higher and signal that there would not necessarily be any more rate cuts potentially this year. And we were looking for euro upside, euro pound buying, euro US dollar buying too. And in the event, the ECB, they cut rates, that was widely expected. But their sort of way of signaling that they were perhaps less likely to cut rates again was if they revised inflation and growth forecasts higher. And they did both of those things. Inflation forecast revised higher for this year and next. Growth forecast revised higher for this year and next. And that was a clear opportunity to buy the euro against the dollar or against the pound. And we were looking here at an opportunity to see at 1:15. The decision came in, and 1:45 was the ECB press conference, and there's a clear opportunity to buy the euro into the ECB press conference, and this may still track higher, but this will be dependent on the non-farm payrolls on Friday at the time of making this video. But you can see there was a nice opportunity for, even if you got in after the actual decision, full 5 minutes later, there was still a move from 8.1 up to 90, a good 19 points move higher. And if you were able to get in, just a few minutes after the initial decision, so you got here in on the worst fill, then you still would have had around 19 points of potential upside. So that's why we look at the calendar, so that we can find high probability opportunities in advance. Now for this week, beginning Monday the 10th of June, there is a couple of things to note. So the first main event is coming on Tuesday. We've got the UK employment data. Now, at the last Bank of England meeting, one extra member joined the Monetary Policy Committee looking for a Bank of England rate cut, and that was the Deputy Governor, Ramsden. So if we see weakness in the labour market on Tuesday and or weakness in the GDP print on Wednesday, then it wouldn't be unreasonable to expect some pound selling, because investors will start to anticipate lower Bank of England interest rates, and those voices and those people who've been waiting on the sidelines, waiting for the Bank of England to cut interest rates, will start to grow in anticipation of those coming rate cuts, and will likely see some pound selling. So weakness in the labour market, weakness in UK GDP are definitely two events to keep a close eye on. Then on Wednesday, we have the US CPI print. We all know that the US has been keenly focused on inflation data. And if we see a big miss here in the US inflation data, then look for further dollar weakness to really sort of accelerate and accent. If we see a big print, then we could see some of the recent dollar weakness on lower CPI prints get priced out. And if we start seeing markets expecting a higher for longer narrative, then watch out for volatility on the US CPI print. And don't forget, at the end of the day, we've got the interest rate decision from the Federal Reserve. Now, we have the summary of economic projections, the so-called dot plot, which will let us know what the Fed's thinking about the upcoming path of inflation, path of GDP. So we'll be covering that live, of course, and we'll be picking our way through that event just to make it clear. Now, on Thursday, bit of a quiet data point. You've got the Aussie employment data. I'm going to give that a pass. Australia say they could go, they're not ruling anything in or out. A little bit of weaker growth we've had out of Australia. Governor Bullock said that's not a big surprise. She sort of said there's more to what's going to happen with rates than just what the inflation data. But inflation data is so important for the Australian dollar right now that the employment data is a bit higher, a bit lower. So what? So we're going to leave that for Thursday. Friday, we've got the Bank of Japan interest rate decision. Now, there's been a number of headlines out recently that the Bank of Japan is going to drop a clue about their bond tapering plan. That's been helping to give pockets of yen strength. Now, if they slowly taper their bond purchases, Goldman Sachs reckon it will be about 5 to 10 basis points impact on the 10-year JJBs. So there's quite a mild kind of impact on the yen. The mild bullish bias remains for the yen. Okay, that remains in place. But the Bank of Japan, Governor Ueda said we're going to be very cautious on interest rates. We don't want to make a big mistake. So the Bank of Japan is very cautious. So unlikely to see any big moves at the Bank of Japan meeting. Obviously, there could be a surprise, but even if they taper their bond purchase, they signal that to markets. Bond markets have been very mediocre in their reaction to it, and the reactions are expected to be quite small anyway. So there's not a lot there. The end of the day finishes with the University of Michigan sentiment data. Worth having a look at. Could see a bit of a final dollar shift to mark the end of the week. But aside from that, the main events of this week is the US CPI, Fed interest rate meeting, and that UK data out early in the week. Of course, all risk events will be covered live, and we'll be updating the cheat sheet each day. So look out for what to look for, which currency pairs and which instruments are most likely to see movement on the events, and what the catalysts will be. Okay, folks, take care. Have a very good week.